And there's a big conversation about the future of banking in Ghana. Virtual assets and, in fact, other important infrastructure like trust infrastructure. That is what will be our focus here on Beyond the Numbers tonight. And as always, I do this with Winston Taki, the big man. And in fact, we have some big numbers on the screens. But before we go to that, we have a special guest in the studio in the person of Ethel Kofi, and she is the founder and CEO of Idel. Idel Technology and Consulting. She has joined us. She's a giant in the fintech space. And also, when you talk about virtual asset, recently she's actually launched a book. And in fact, that's the reason why we thought it was important that she joined us on the show to analyze this important thing, because the future of banking is very important. The banking space is changing. I would want us to start from this big figure you see on the big wall. That is 4.5 trillion Ghana cedis in Momo transaction in 2025 alone. What a way to start. If you're looking at the future of banking, you definitely would have to start from mobile money, because this figure is actually more than 3 times, almost about 4 times our GDP. Yeah. What is the future of banking? Tell us.
Well, here's the thing. Ghana is at a big inflection point. Right? We've got numbers like 4.5 trillion. And then you can say, even within our interbank settlement systems, you've got something like 3.4 trillion moving through just the banking system. The Bank of Ghana has just put out an open banking directive. Parliament has just put in place the Virtual Assets Providers Bill. So we're at a very interesting place in Ghana, where we are moving from finance infrastructure that's just regulation to now to operating it and actually leading in Africa in finance and financial technology.
This is the number of transactions, Winston. You can see that big number on the smart wall. 9.7 billion in Momo transaction, the number of mobile money transactions. And we were doing the math, Winston, and we saw that if you look at in a day, this figure will tell you that on average, Ghana is in about 26 million Momo transactions in a day. I will go to Ethel very soon, but I want to talk about this big number. The big risk currently is the cyber fraud. Momo fraud and all of that. Now that this space is growing, and you hear from Ethel that this is the future of banking, and what a way to start. Tell us about some of the risks and where we can actually position ourselves to take advantage of this, this growing space called mobile money and banking.
Over the years, the conversation has been improving financial inclusivity in our transactions in daily lives. And these numbers reflect how we've grown as a country since mobile money came to light. And it should tell you that indeed people have now become financially informed about how they should move their monies. This should tell you that the banking structure in Ghana has been improving over the years, from not just having a place to virtual transactions. It tells you that if you own a business, you don't have a virtual account, you are kind of missing out on what is happening in a new trend. So with this number reflecting the reality, I saw some conversation going on, not just this morning, over the week, that has to do with this same number. People are saying how convenient it is now to send money compared to them going to a real bank. But they also talk about how the delay structure, the process in the paperwork, they want quick movement of services. And customer experience has become quite important now. Now, banks are assessed based on the kind of experience their customers have in transacting businesses. And this is not just a number, it has a lot of story behind it. As we going beyond these numbers, tells you that banks have to now review their way of doing business, not just receiving awards at the end of the year, December, best bank, but you must show working, and this working reflect your profitability subsequently. With the huge numbers, over 3 trillion Ghana cedis in terms of how the market value of transaction has happened within the year 2025, tells you that if you don't catch up, you fall out.
This is a big future, and what you see is that once you find this big transaction and big values involved, that is when it attracts all forms of risk. Yeah. What is the risk looking like in terms of digital banking in the future?
Okay, so that's actually why we, about a week ago, we ran the Future of Finance Dialogues. This was a closed-door event with your top leaders, and we had 4 bank CEOs. We had the Deputy Governor of the Bank of Ghana. We had the Head of Data Protection Ghana. We had all the people.
I think I saw the SEC boss.
The deputy
exactly,
a solid lineup of people that actually moved the conversation. So not just the regulators, you had the CEOs and the fintechs in the room. And the conversations were centered around consumer protection and trust infrastructure. So we've got this thing where innovation is running, right? We are building, we are doing amazing things. Very, very soon we'll have virtual assets providers in the market. The thing is, your consumer must be protected. The consumers must have trust in the system. They must believe that if there is an issue, I have recourse. That if something happens, we can, even if I'm using a system that has different players in it. For instance, I have a system that maybe lending goes to my Momo, goes to another platform. If something happens in that process, the bank will say, go to your lender, but this person won't go to this thing. And those are the conversations we had in that room. So part of what we did in that room, it was a 3-hour conversation. We kept the discussion itself under Chatham House rules, which meant that we couldn't attribute, because we wanted people to be able to speak out and have really solid points. And what we're doing with that conversation, at the end of next week, we will actually bring out the documentation of all the conversations that we had, put them together, take them to BOG. BOG has requested, Parliament has requested, and UNDP has requested, because we want to push the conversation beyond just the innovation. We want to talk about the consumer at the center of it. We want to talk about trust, because other than that, you will have, Ghana will be at the forefront, but the users would not want to be using the platforms because of issues with fraud and cybercrime. Again, you can see that there's a lot of work being done by the agency that works in cybersecurity and the ministry to arrest a lot of the folks that are involved in this. And there's also a literacy conversation, right? So people need to understand what it means to have digital financial literacy. How do you use your apps? How do you make sure you're not giving your PIN out? All those things are part of moving us from the inflection points where we are at to the powerhouse that we could be in Africa.
Interesting enough, I want to bring in this. So the crypto market currently is, in terms of capitalization, exceeds $3.17 trillion. And as of 2026 in January, daily trading volume is around $47 billion. And which the Bitcoin dominates about 56% of it totally, with Ethereum and stablecoin coming into the narrative. I want to understand from you also, when they say crypto or virtual asset, what do they stand for? And as a country, how prepared are we to embrace this new fiat structure?
Well, actually, we are very prepared. So there are 5 countries in Africa currently that have regulation, and Ghana is one of them. We've actually quite advanced. So, like I said, in December, Parliament has passed the Virtual Assets Bill. Even before that, the Securities Exchange Commission had some sort of guidelines, which meant that even when you were working in the space, you had to register. Because the problem is, I don't want to come and use your platform to buy crypto and then you disappear and I can't find you. So there is a lot of work actually being done between the Securities Exchange Commission and BOG to ensure that the players that come in the market are protected. Now, last week, BOG announced a sandbox of 5 companies, value-added service providers, 5 companies that are coming into the space. They will play in that sandbox. They will test out concepts. So BOG and Securities Exchange Commission is very much on top of it, because what we don't want, again, is that we will have the wild, wild west. Right, where everybody is buying crypto. Again, if you look at Nigeria banned crypto, and when they banned it, the numbers went high, right? And so that means that there's no protection for the consumer, right? But I think Ghana is doing a really good way, a phased approach. We're waiting for the Securities Exchange Commission to give us guidelines. They are not just bringing the fintechs into it; they are bringing the banks into it, right? Banks could be custodians, which means that they protect us. Right, so that your crypto does not just go up in flames. So in this space, like I said, in this space right now, there is a lot of interesting movements. We're at a really good place. We're waiting for the Securities Exchange Commission to give us guidelines. There are many players in the space who are ready and willing. There are banks in the space who are asking, how do we support right? And even the Securities Exchange Commission, well, the Ghana Stock Exchange, for instance, there are things like you could tokenize the things you buy on the exchange. And in that way, you can also, they can also partake in the virtual assets. But there's so much possibility and things we could do. And I love that both the regulators and the bankers and the fintechs and the consumers are talking and finding a path.
Talking about, value, right? That is a space that is valued around $10 billion US. And currently, although we have some level of, regulation, there's a big risk involved there, especially learning from what has happened to Momo at the moment. How do we make sure that the Momo story doesn't find its way into the domain of this virtual asset, Bitcoin, and all of that? Because when I was in school, I remember in 2018, in University of Ghana, right? There was an introduction of a platform, not for University of Ghana anyway. There was somebody that introduced a platform. I heard stories around that time that people were buying Bitcoins on those platforms for about 8 months. They just woke up and that platform was missing. Their monies and everything went. So how do we make sure that we don't find the stories we've seen so far from Momo into the Bitcoin space?
Right. But this is where the open banking conversation is, right? So right now, as you sit in Ghana, your financial data is in different silos. So your EcoBank data view sits with EcoBank and you see that. Your Momo transactions sit alone, they sit there. All your different, the open banking framework, the draft framework which was announced December last year, that framework allows interoperability between all the systems that allows a single view, right? With your permission, of course. You can then allow the platform to be able to pull that data in. And that could include your virtual asset. That also gives you a way to be able to track and see what's going on. There's also a conversation around, again, part of our consumer protection.
Very important.
What happens when the customer, something goes wrong? Say, I use my Momo to buy on a crypto platform to buy crypto, and somewhere in the process, my Momo wallet got hacked. Who is responsible? Who can I go to? Is there a single point that I can go to where I can track? Those are all parts of the conversation we had, and those are part of the recommendations that we're taking to the Securities Exchange Commission and Bank of Ghana, saying to them, actually, we need single points for consumers to be able to track whatever issues. They need a third party, whether it's a third party ombudsman or BOG itself, that adjudicates issues like this. Because the more we interconnect the systems, the more the space for fraud will be wild.
Yeah.
And even on the Momo fraud issue, I think that there has been a lot of work done in the last couple of years to actually bridge the gap. And the consumer digital literacy, sometimes when somebody, when you listen to the story, you realize that, okay, people didn't have information, but also the handovers, right? So maybe your wallets might investigate, then they hand over to the police. Then they have to hand over to that chain, there are issues within that chain, and sometimes things drop off. And so your provider can tell you, okay, we've investigated and we moved it to the police, and that's all they can do because they are not an investigative body. What then happens with your investigative body, and what then happens at your court? So it's a long conversation.
Interesting. Recently, we've seen from last year financial crimes related, people being assessed to be transacting or even frauding people outside and all that. I'm sure that has been part of the conversation. What kind of protection and safety strategy that has been in the fulcrum of discussion that probably you can give viewers insight on?
Well, there's a conversation about remediation. So the idea is when you report an incident, you shouldn't have to then be without your money, right? It is the job of the provider to at least refund you while they investigate. That is one of the conversations that have come up, right? Again, because when people feel free, they can give out the ideas. There are also a single point of tracking issues. There also has to be there's also a conversation around the framework of how we decide who is at fault from the provider side. If there are 3, 4, even 5 different providers in that chain, how do we determine who is at fault and who then carries the responsibility? So those are conversations that we're having.
I want us to talk about the innovation and its impact maybe on our banking sector, right? The banking sector, for me, is very, very delicate. And in fact, if you are bringing on board new stuff, you need to test the water, see whether the banking sector can actually absorb it, because we saw how it took some level of time. I mean, some time before Momo actually migrated from its own space into the banking space, where currently, even if you look at interoperability, the data is currently telling that in 2025 alone, that's about 52 billion between all the telcos, right? And maybe the banks. Now, the key question is, we want to bring on board the virtual assets, want to bring on board Momo and all of that. The banking sector must situate itself in a way to actually absorb some of the shocks. Have you done any form of work in terms of how prepared the banks are in terms of moving forward into this virtual asset space, digital banking, interoperability, and all other issues?
Yes. Even with Momo, banks have always been involved with Momo. So for as per the regulation, for every 1 CD you have in your Momo wallet, there is a corresponding 1 CD sitting in a bank somewhere. So banks have always been involved with it. Actually, banks are really excited, which is why we had 4 bank MDs in the room on the day when we had the discussions. The questions they're asking, so part of, I advised a few bank MDs, and part of the conversations that we were having was, how do we participate, right? And the Bank of Ghana is also very cognizant of the fact that banks must participate in it. So when we get the full guidelines, you will see that banks will be able to either be custodians or support transactions or be part of that they're not going to be outside of it. I think every time we have this conversation, people go, the banks will be sidelined. That's not what's going to happen, because for economic stability, our banks must do well. And so banks will be part of the conversation. And so I think, if nothing else, all the virtual asset service providers will at least be working with the banks to provide you the services that you need.
Now, after the guidelines are released, what is the next step should the financial sector be expecting?
Operationalization, right? So the thing here is, we are very good with regulations. Ghana is very good with policies. We are on top of it.
Laws and all of
Formulating laws. We are absolutely brilliant. But this is not just a regulatory issue. It is about the banks, it's about the virtual assets providers, about the fintechs actually looking in the market and building the solutions and testing out the solutions and using open banking frameworks where they are sharing data. So now, once we have the regulations in place, it is on us in private sector to begin to build solutions. The Securities and Exchange Commission a few weeks ago just announced the Virtual Assets Literacy Program. They call it Naval. I can't remember what the whole thing is. But there's going to be work in teaching the populace what they could do with virtual assets, what they could do with crypto, how they can protect themselves, how they can work with the players. So it's not, there's a literacy conversation that is happening within the regulators, but it's on us from this point as private sector players to be able to build solutions that consumers need and consumers can use.
Now, all those who are the stakeholders involved, I don't know if you have thought about the risk that it could pose to the stability of the city. Because I listened to the governor when he spoke, somewhere, I think abroad, about how prepared Ghana was. I think he spoke to Abebe Salasi, IMF, and he spoke about virtual assets regulating crypto because he sees the next threat, not maybe coming from global shocks and all of that. In terms of our city, he sees a big threat also coming from virtual assets because how they move can sometimes influence the exchange rate. I don't know if there have been conversations around how this could be linked to the stability of the city.
Well, okay, so there were some conversations around that. I think, which is why the regulator being on top of it is important, which is why the banking system being at the middle of it is important. So we're not leaving it as the wild, wild west, because that's where we have problems, right? Like Nigeria did, where they left it as the wild, wild west, and people were doing different things. And so I think we're not necessarily going to have that problem. But Ghana has always also tried, is also piloting the ECD, which is our own virtual currency. So I think we generally, I think as a country, we've got a plan to ensure that the stability of both our ecosystem and our banks are in place by the safeguards that we put in.
ECD conversation, very interesting, right? I've been expecting the ECD. I really wanted to come. I don't know if there are any timelines.
I have no idea. BOG would have to give you the answers to that.
I want to get from you. We've heard about the consumer being protected. What about the service providers? What structure is there for them?
Well, so they are being given rules on how to operate, right? They are
anybody just be a service provider?
No, so there is a minimum capital requirement of, I think, $500 million.
Dollars or cedis?
I think it's cedis. There is a minimum. So we are not allowing anybody and everybody to just walk in and start a virtual assets for. I think people who can actually
have some level of guarantee, right?
Level of guarantee. Yeah. So we're not going to allow anybody to just wake up and start a marketplace. So there are guarantees as to who can and what they can do. I think it's the same thing as where the banks have minimal capital requirements. They're treating it as you would treat the capital assets and capital markets and protecting us that way.
If that's the way, then we've been seeing the central bank releasing lists of Security and Exchange Commission releasing lists of virtual platforms that are not licensed.
Yes.
And they keep educating consumers not to apply or trade with them. Would that not necessarily create that purpose replication?
But it's the same thing as if you go to unlicensed lenders. If they can shut them down, they'll shut them down because somebody is going to build. If we tell you don't use it and you go and use it, then it's you made that decision.
There are no protection for unaware individuals who likely, unfortunately, happen to be victims of those who might have bought assets with them.
Well, this is why there's a literacy program, I do not know clearly, because again, we're waiting for the SEC regulations. I do not know clearly what happens if you use platforms like that and what your protections are. I suspect that in the guidelines, we'll see how they remediate those issues.
In fact, you have the future of finance dialogues. I would want you to talk about that. Yes. But before that, I want you to address this. 734,000. That is the total number of, credit cards. I don't know if there have been conversations about credit cards because you need a whole system to actually regulate that. And after they talk to us about the future of finance dialogues.
The card systems are heavily regulated, but these numbers, the problem is that's why these numbers are really small if you compare them to the mobile money numbers, right? These numbers are almost insignificant if you think.
Mobile money is in billions, it's actually in
right.
Thousands.
But this is why you've got, example, Visa, which instead of their strategy when coming into the market, coming into Africa, was actually buying a percentage in MTN mobile money, buying a percentage in Airtel wallet, and then creating platforms where you could then link your cards to your mobile money. Because they've had to change strategy in Africa because these numbers are small, right? And Visa also has its own strategy where it's working with a lot of fintechs. A lot of fintech players in the market because they know this market is not a card market.
Now talk to us about the future of finance dialogues and how that is important to this conversation.
Well, when we realize that Ghana is at an inflection point, even Africa is at an inflection point in these ecosystem finance conversations, we decided that we wanted to build a high trust room with the right people. Because we can build a high trust room, but the people who actually make the decisions, if they're not in the room, that does not make sense. And so we brought the Deputy Bank of Ghana Governor, Deputy at SEC. We had the Chair of the Parliamentary Committee for Communications and Information and Technology. We had Ghana Data Protection. We had the CEO of MTN Momo Ghana in the room. We had a whole bunch of fintechs, and we sat through a very nice three-course dinner, where we discussed open banking, what it meant, what they needed from the regulators, and what the regulators needed from us. We talked about virtual assets, how they could participate in it what they needed from the regulators and what the regulator. We talked about trust and partnerships. How do we ensure that consumers are protected? And that then led to now, the last time I said, now a 40-page document of recommendations that will be handed over the next week to UNDP, Bank of Ghana, into Parliament.
And
that hopefully will push, that will push the conversation. And these are the people actually running these organizations saying to the regulators, here's what I think we could do.
Okay.
We also have some thinking on what could be done in 30, 60, 90 days to push the agenda.
That's
interesting conversations, right?
Very interesting.
Virtual assets has a very big future in Ghana.
Yeah.
We will send you a copy.
Yeah, so that's today's wrap on Beyond the Numbers, give you insight. And certainly expect more conversation on the crypto market here on Beyond the Numbers and what the virtual asset framework will be. We'll be reaching out to SEC and all players and break it down for you to have clarity before the full run-up.
And in fact, Wednesday, we need to talk Ethel. Ethel Kofi was our guest. She is the CEO and founder of Idel Technology and Consulting. Thank you very much for being part of the show. Enjoy the rest of your evening. Hello.